Hey guys, what's going on? In this video, we're gonna talk about what is a interest rate buy down. I know you've heard this term a lot lately, especially if you're in the market, if you're thinking about buying or selling. It's been passed around a lot, but the question is, what does it mean? How does it work? How much does it cost? What does it do? Who does it help? Right? So we know that in this high interest rate environment, there had to be a solution to help buyers that still need to buy right now. And that's what this interest rate buy down is. Lenders are offering it, new builders are offering it to give you incentives to be able to get you into the house that you want. But let's break it down in this video and figure out exactly what it means. How does it impact you? How much does it lower your payment? How does it impact your long-term loan? All these things we're gonna talk about right now in this video, so check it out. Hey, Robert Tolnai here, your local realtor with Robert Tolnai Home Group. All right guys, so again, thank you so much for watching this video. I truly appreciate it. And as you know, I'm always doing these videos to help you, give you more information so you can make better decisions for you and your family when it comes to real estate. Whether you're buying, selling, investing, doesn't matter. We got your back. And before we get into the video, do me a huge favor, as always, subscribe to the channel and smash that bell so you can be informed next time we put on a new video. And it really helps the YouTube algorithm get this information out to more people so they can be informed as well. Because the big problem is, the reason I started these videos is there is no education out there when it comes to the biggest decision of most people's lives, buying or selling a real estate asset, whether it's your home or investment property. There's nothing out there. They don't teach you anything in high school. They don't teach you anything in college. Nada. So you got to rely on your professionals, your best real estate agent that you know, or anybody in that realm. So hopefully this is helping you guys make better decisions and help you understand better what this is. All right, so let's get right into this. So what we're gonna do in this video is just gonna break down what interest rate buy down is. How much does it cost? How much does it lower your mortgage? How much does it lower your interest rate? How is that going to affect you? Who's gonna pay for that? Where is that money coming from? So hopefully by the end of this video, you have these answers and you can decide if this is good enough to help you still be in the market and buy the home that you really want to, and not have to wait for interest rates to come down, because we don't know when that's gonna be, if it's gonna be anytime soon. And if you find a home that you really want, you should be able to go in and just buy it, because the market always adjusts with time. But this interest rate buy down will help you keep that mortgage lower so you can afford it and not have to struggle with the payment. I'm gonna put it on the screen here. This is gonna be a mortgage calculator that will go through the steps and break it down to see exactly what those items are that we just talked about. And if at the end of the video you still have questions, as always guys, call me, text me, email me. You know I got your back. We'll go have a cup of coffee. We'll sit down and answer more questions, whatever you need. I got your back, so don't hesitate to reach out anytime. All right, so this is the mortgage calculator that we're gonna use here. I'm gonna put it up on the screen. Just follow along. And like I said, if at any time anything doesn't make sense, text me with questions or comment right here in the video and I'll get right back to you. So let's get started. The mortgage calculator that anybody can use, right? So if you can look in here, I'm gonna put the home value at what our average home price is right now. So let's say 425, which is close enough. It's somewhere in there. Down payment, 5%. That's gonna leave a loan amount of $403,750. Interest rate right now is going to be in the high sixes. Okay, so we're going to put down here 6.87, or let's go 6.75. Whoops, that's not what I said. 6.75. Okay. The loan term is always 30 years. We're going to have a start date December 2022. That's when I'm recording this. We're going to estimate property taxes are $2,400 a year, which is on average correct for us here in the Phoenix Metro. PMI, that's private mortgage insurance, which most of you know. If you don't know, anytime you don't put 20% down on a purchase of a home, the bank will charge you mortgage insurance. It's just an easy way for the bank to make some extra free money. So this is going to vary depending on how much you put down. So your lender is going to figure all that out, but we're going to leave what the default is in here for example purposes. Home insurance, about $1,000 a year. And for us in Phoenix, most homes are going to have an HOA, and on average are going to be probably $50. They can be as low as $25, $30 a month, and as high as, you know, $100 or $200 a month depending on the community. But we'll leave it at $50. Okay, so based on this scenario, over here to the right where your mortgage payment summary is, it's going to show you that your mortgage payment is going to be $3,120.28. And that includes your property taxes, your insurance, the private mortgage insurance, and your monthly HOA. So all the things we put in here, it will be calculated on this side here. So now what can we do to reduce that payment? Okay, $3,100 payment on a $400,000 home is a bit steep based on what we've seen here in Phoenix over the years. Even though our prices have gotten up recently quite a bit, the interest rates were so low that it kept the mortgage payment low. But now that the interest rates are up, it increased the mortgage payment. So for an average family, that's going to be a bit high. For some people, that's a very affordable payment. But let's just assume that this is a tough payment to make and it's stopping you from buying the house that you want. So that's where the mortgage interest rate buy down comes into place. Okay, and I'll show you the difference here in a minute of why we know with certainty that getting an interest rate buy down is so much more important than reducing the purchase price of a home. That will affect your mortgage payment a lot more. So if you have the option, which in this market, if you have a good realtor, they should tell you, hey, instead of asking for a price reduction, let's ask for more credit back from the seller to help you buy down the interest rate even lower. And let's give you an example here. So with this home, if we leave this home at the price that it's at, or actually let's work it backwards. So let's say we know in this market we're able to get some good deals. So we can negotiate some good pricing. So instead of $425, let's say we're gonna ask for a price reduction of $25,000. So if we make this home, well, let's make sure we remember this payment, okay? So the payment right now is $3,120, okay? Which is right here. Now, if we change that to $400,000, so we're getting a $25,000 price reduction, it will lower the payment to $2,956, okay? Which is obviously not a big reduction, okay? And you're getting $25,000 off the price, okay? If we calculate this out, this is going to reduce your mortgage payment by $164, okay? So that's a $25,000 price reduction. Now, if we go back to $425,000, let's say we're gonna give them the price that they want, but instead we're gonna ask for that $25,000 in credit so we can buy down the interest rate. Now, typically, most lenders have told us that a 2% credit from the seller can buy your interest rate down 1 percentage point. What does that mean? 2% of the price, which in this case would be at $425,000, 2% is going to be right around $8,500. Okay, that's 2%. Will buy down the rate 1 percentage point, meaning from 6.75 to 1.75. Okay, now we're trying to negotiate $25,000. So let's say if it's a conventional loan, you're able to ask up to 6% back in concessions. And I'm not sure how much a lender can let you buy down the rate, but that's something you can talk to the lender. But let's say we end up getting 4%, which is $17,000, okay? That's 4% of the purchase price will buy us 2% lower interest rate, okay? $17,000. So that would mean from 6.75, you should be able to buy it down to 4.75. But let's be safe, and let's say that it's, just to make it safe, instead of 4.75, you buy it down to 5.25, 1.5 percentage points. Let's look at what a difference that will make in your payment. So now your new payment at that same price of $425, nothing else changed except the interest rate. We bought it down to 5.25 interest rate. Now your new payment is $27.31. Okay, now that is an affordable payment for most people on a $400,000 home. So that means that your payment went down $389. So almost $400. You were able to lower your payment with less money, okay? So it's not $25,000, which we took off the price. We got 4%, which is $17,000, meaning that leaves still $8,000 left over, which would cover for all of your closing costs, okay? So with that $25,000, instead of asking the seller to reduce the price by that much, you are so much better off by getting $17,000 of that to give to the lender to buy your rate down by 1.5 to 2%. However that works with the lender, you have to find that out from them. Bringing down your mortgage payment by almost $400 a month, and leaves you $8,000 to still cover all of your closing costs. So you don't have to come out with anything out of pocket other than your down payment. Now, if you can see that that is a much better scenario for you as a home buyer, then we really need to talk face to face. Now, there are the few people out there that are more investor minded. So for them, whatever the reason may be, it's more important that they get the house for a lower price. I honestly don't understand the meaning behind that and the calculation and the math behind that. For me, even as an investor, I would want a lower interest rate because that means my mortgage payment is lower, I can rent it, and then my profit margin per month is higher, right? Like if I get a smaller mortgage payment, the rent's still the same that I'm gonna charge a renter. So I have a bigger profit margin per month because for me as an investor, I'm about the long term. So I'm always gonna buy to hold and rent it out so somebody else is paying off that home for me, and I want a bigger gap there for that profit margin. So I want to keep my monthly payment to the bank as low as possible, charge as high of a rent as possible, so that middle chunk of profit for me is higher. Okay, but there are going to be some people that will say, no, I'd just rather get that off the price. For whatever reason, it is what it is. But in my opinion, for you as a home buyer who's going to live in that home, this is by far your best solution. So I hope that makes sense, guys. I'm just going to review it real quick with you, okay? Buying a home for $425,000 with these terms that we put in here, you know, average interest rate right now, 6.875, will give you a monthly mortgage payment of $3,120. Okay, which is a bit high for that type of a home. If you're able to negotiate $25,000 off the price, which some of you may think that's too much and most sellers won't give you that, no problem. I'll do another scenario here for you in a minute just to see with less money what you can do. Okay, if you take that $25,000 off the price of the home and you make the home $400,000 still at a 6.875 interest rate, your monthly mortgage payment only gets reduced by $164. If instead you take most of that $25,000 and you apply $17,000 to the loan to buy down your interest rate to 5.25, which again, I went for the higher amount, that will save you over $400 in the monthly payment. Now, let's say that the lender is able to buy it down 2 full percentage points with your 4% credit, which would bring it down to 4.875. That's gonna lower the payment another $100. So you're almost $500 lower in your monthly mortgage payment if you're able to get this buy down, and you still have the $8,000 to cover all of your closing costs, okay? So I hope that makes sense. I mean, that's a no-brainer to me, but let's go back and say that you're not able to get $25,000 back. Maybe we only get $15,000, okay? So if you only get $15,000 credit, you can apply all of it towards the rate buy down, and that will bring you back to the same scenario that we just talked about. Almost just, you know, a few bucks here and there, but you won't have any money left over for your closing costs. So if you want to cover your closing costs, let's say your closing costs are $6,000, that leaves you $9,000 for the rate buy down, and that might only buy your rate down 1%. So from 6.875 to 5.875. And that will make your payment $28.89. Let's just call it a $28.90. So from $31.20, that will lower your mortgage payment by $230. So that's still over $100 more than what it would lower your payment if you do the price reduction. Now, I didn't even get into the nitty-gritty of what you see up here, which is the amortization schedule. The lower your interest payment is, the less money will go to interest over the time of the loan, and your loan will get paid down faster. So if you keep the house for 30 years, which is very unlikely, it's very few people that stay in the house that long. People move on average every 7 years. But the savings that you'll have in interest per month over those 5, 6, 7, 8, 10 years, it is crazy. If you can get a price reduction, it's better to use that to buy down your interest rate rather than reduce the price, because it's going to benefit you much, much better in the long term, and it will lower your mortgage payment anywhere from $260 to $500, depending on how much you can buy down that rate. All right, so there you have it. I hope that helped. Again, if you still have questions, not a problem. Reach out, let me know. I'll get right back to you. Thanks so much for watching, and hey, again, don't forget to subscribe and click that bell. Have a great day. We'll see you on the next one.